So
Now's a perfect time to introduce our first guest to help us discuss ETFs and what's happening, in the crypto space from a traditional financial perspective. And so we've got our very good friend Roderick McKinley, who is a very talented token economist in the industry. He was actually my mentor when I started diving into the world of tokenomics. He's worked with a very impressive set of projects. He's created educational material to help teach others around the practice of token economics. And he's working with some very, very notable organizations in helping structure processes, best practices, etc. So without further ado, we've got Roderick McKinley. How you doing, brother? It's good to see you.
hey, really good to see you guys.
Hey.
Well, we all know each other from a while back. You did mention that, so really pleased to be on the show, guys. Thanks for having me. Yeah,
Yeah, thanks for joining.
Welcome. It's great to see you, and lovely shirt, man. This is this is fantastic attire.
You always have
I
great
gotta
shirts. I
gotta
don't know.
gotta gotta jazz it up a little bit. Oh, I'm usually pretty sober on my own channel, but I thought, okay,
Yeah,
guys, this is our quick ventures now. I gotta bring out that spice.
it's
Spice
boom
it up.
boom,
Yeah,
man.
yeah, yeah.
So, Rodrigo, if you don't mind, give us like a brief rundown of your experience in the world of traditional finance and this kind of perspective that you bring into the world of crypto.
Yeah, so I started out supporting renewable energy investments, right? So my experience, finance is a big church. There are a lot of sort of corners and different areas and specialisms. So my area was more focused on what we would call corporate finance. How do you run a company, and how do the inner working, how do you manage that to enhance the performance of your company, to raise money, and so on and so forth. And one of the skills I developed in while working on renewables specifically was how to build these models of companies that explain how cash moves, how it goes in and out of the company entity, and essentially leverage that tool either to improve the way you manage cash or again to raise money. And I'd been freelancing this skill set and working and living remotely all over the world. And we all happened to be caught on a little tiny island at the same time when the pandemic hit. And lo and behold, there were these crypto influencers and investors on the island, and they saw what I could do, and they say, "Hey, this is going to be really helpful to us in coming up with these tokenomics." And I'm like, "Token what?" I had no idea, and you know, my traditional education gave me loads of advantages, but it did burden me with a big, heavy skepticism about crypto and a very bad impression of what was going on. So I said yes eventually because I was like, well, I've got nothing better to do. The rest of the world's like locked inside, and I at least get to work on something unusual and different. And that brought me in, and I got really excited once I started looking at the technology. And actually, clients eventually started coming to me and saying, okay, we want you to design a token economy, token utility. And then I started reaching way back into my university studies and stuff that I'd studied about economics. And then suddenly, like a whole bunch of things just started coming up. And I'm like, wow, this is so incredibly fascinating and interesting. Literally, things that I was told and would never be solved in economics are now, might be improved upon if not fixed. I literally had to pass exams where you would say, like, this is why we can't make the world a better place. And this is why we always have to go for premise. It's called the second best solution. You can never go for the first best solution because we've proven it's impossible. Well, blockchain gives you a whole new tool set. And maybe as you could tell by me saying all this, I'm just like, I'm a curious, I'm a, intellectual guy. So all of these problems were just like so rich and interesting to solve. And then when everything, went down south with Terra Luna and everything that followed, I said, you know what? I need to lock myself up in a cave and try and work out what's what here. And that's been my focus in the time since I've been creating educational materials, but also using that to really school myself and try to get to a point of greater clarity where I'm not just aping everybody else because you guys remember what it was like. Everything was so hot and
Mm.
fast. Like the only way you could deliver on a client objective was to say, okay, which project is doing well now? Let's copy them. And fair enough, that may be the right thing to do in some circumstances, but I want to really have my own framework and my own, my own grounded principles for making my choices and recommendations. So that's what I've been focusing on. And yeah, actually, I've had to learn a lot about financial markets. If, for all the financial experience I had, like I said, my expertise was more at the company level,
Yeah.
and markets are a completely different thing. And if you don't understand markets, you're not going to understand lots of important things, lots of things that are basically fundamental to crypto assets and digital assets. So I've been doing a lot of study in that area as well. Okay, I think I was rambling on a bit. That's
I
all
love
I
when
was
you
doing.
ramble, man. So like this is this is the funny thing. I had dinner with a friend last night. She's a PhD graduate in physics and chemistry, and she'd been studying a lot about, I think, photonics. And so we were talking a little bit about crypto, and then the topic turned to DeSci. And then I saw like things
Mm,
kind of click in her mind. And it was the same kind of like enthusiasm that I'm seeing here from you and in all of our discussions. I think
mm.
that's one of the best parts of when we talk together. And we've had many discussions like this. And I think the fun thing about cryptocurrency and more so tokenomics is that this is the fun intersection of where you talk about building or theorizing or conceptualizing a company from the ground up, maybe in some sort of mathematical model. But instead of just cash, you've got all these other different assets, and then the game becomes exciting, right? And so this is one of the best things of our job is helping design these economies that we can use innovative different concepts and novels to solve real world problems that couldn't be solved before. But, Rodrigo, with all of that being said, I feel like this question coming to you is kind of overkill. It's kind of like asking a Michelin star chef to explain how to pour a bowl of cereal. But why don't you break it down for us and tell us what is an ETF, an exchange traded fund, just for our
Oh,
viewers?
oh God, I think this is on an exam I'm meant to be sitting in a week, and I don't know how to answer this. So I'm not going to get this technically right 100%. Let's instead of explaining to you what it is, let's explain to you why you would be interested in one. There's an old adage that says don't put all your eggs in one basket, okay? When you're that's sort of like investing advice 101. And because if you put all your hopes on one coin or one asset, whatever it is, if that goes south, you're stuck. So actually, the first piece of advice you're given in good investment practice is to diversify. Now, in the past, the only way you could diversify your assets would be if you were already incredibly rich and you could buy up lots of different stocks. And so the but that was only available to incredibly wealthy people. So one of the main motivations for the invention of the ETF was that, okay, if we pull everybody else's funds together, we can do that work for you. We then have the money to go buy a diversified portfolio. And the most famous ETF tracks the S&P 500, and that completely revolutionized the world of investing, because now people could be make dumb investments, which is like buy the 500 biggest companies in the United States, whatever they are, in perpetuity, and that's it, and hold that. And suddenly all of these, sophisticated investment advisors and fund managers were like, couldn't actually outperform that dumb investment. And everybody realized that their fees were, hey, you think traditional finance was that different to crypto? They just wore ties and suits.
Oh,
But it was the
same,
same
same.
sort of game. So it's a mechanism that gives you an easy access to some kind of
Mm,
product, and it's been associated with indices, but you can use the same structure to buy anything, and what they're going to use that structure to buy Bitcoin, and this is really into. We've seen retail investing, conventional financial products have really been opened up to the retail market. I
mm,
had a account with a US bank, and it was an ordinary bank account, but I could buy and sell ETFs and stocks and do all these things. I was raised in the UK, and there was no bank in the UK that would allow me to do that. And that's like a common product now. So imagine people have these kind of services through BlackRock and these kind of UIs. I don't know how the Bitcoin ETF will be accessed, but I'm sure there'll be a push to make it accessible. And then anybody who's already got an app or a web browser can just go buy Bitcoin. None of this. Where do I go to? It's an exchange, KYC, a wallet. What? It's 20 seed phrase. It's just like I go to the same shop window that I've seen all my life, and buy that, and and yeah, that this opens up a door to yeah, a lot of retail money flowing
Mm.
in into Bitcoin for a start.
I
So yeah.
think that's thank you so much for that explanation. At least helping paint the picture around what this might do. And I think this creates, a great understanding for all of our viewers. By the way, real quick, shout out our viewers, Degeneration X, Virtuoso Dow, The Rap, Daniel from Simplicity, and Versosos Media. Thanks for tuning in, guys. But real quick, I know the general idea is we're taking these, let's call them financial instruments, let's call them investment vehicles, assets that
Mhm.
exist in the world of crypto. We're widening the net, right? We're creating more accessibility for these types of assets for people that don't know what crypto is, or maybe they aren't inclined to learn what it is. And Carmelo, I know you told me BlackRock and Fidelity have interest in ETFs like this, Invesco, ARC, Grayscale. I want to bring it back to you, Carmela, because I know you said you had some qualms about this. Obviously, the everyday man or woman stands to benefit from accessing investment vehicles like this. But in your mind, knowing what you do around, let's say, the Grayscale Bitcoin trust and what's happening, the controversy around ETFs and the SEC, who do you think stands to gain the most from creating and listing these products, these financial products?
Yeah, I mean, I think ETFs aren't that controversial. I think it's a matter of time before they're accepted. It just we're waiting for that green light. And we saw a few weeks back when Cointelegraph, some intern either purposefully or accidentally released some article that all the ETFs got approved or one of the ETFs got approved, and that might be who we have to thank for this bull cycle, this mini bull cycle right now that's pumping every token. But yeah, I don't that just goes to show you that it might be a little bit priced in, but everybody's excited about ETFs. And, I can't deny that aspect of it. It's like anything, there's 2 sides to it. So, of course, this is gonna be good in the short term for every token. Like, everything's gonna pump. It's gonna lend more credibility to this space. Like, I remember my dad asked me last year, "How's it working at the Bitcoin store?" And he was dead serious. Like, he really doesn't understand anything about it, but he has heard of Bitcoin, so he's familiar with the brand or whatever you wanna call it. So, Bitcoin is a thing. I'm wondering if going back to the question, who is this gonna cater to? I'm wondering if people like my father are going to have a financial advisor that's going to encourage them to put a little bit of money, like even a little bit of funds into this. Like, okay, here's some exposure to Bitcoin and Ethereum. We don't quite understand it, but it's kind of like a lottery ticket at this point. So they don't understand it, but they realize it's probably going to be a necessary part of the portfolio going forward. But I'm not convinced that that's going to be enough to bring a lot of attention. I think it's more like the people that are already in the space that are going to get even more excited about it because they've got this green light from traditional finance. But going back to your
Mm,
question, I don't know if you guys agree with me, but I got into this space because I don't like traditional finance. I think it's an insider's club, and I'm not really fond of the idea of companies like BlackRock coming in and just dominating everything. And I know that's where we're headed, and I'm trying to make peace with it, but I can't really come to terms with that, and I can't root for it to happen. Like, I know it's gonna happen, it's inevitable, but I can't get excited about it, even though I know it's gonna pump my bag. So it's kind of a weird position to be in. I know it's gonna be good for me, but from an ethos perspective, I'm not happy about it. I don't know how you
yeah,
guys feel.
I'm kind of negative on it as well. I mean, obviously it's great for adoption. We're talking about like a very concrete event that marks some sort of like government validation or regulation being put into place to adopt something like this, right? And so that's unavoidable. And you don't go back after that, honestly. I do think that there will be a lot of demand for these ETF products if they are approved and listed. I think they're going to be integrated into a lot of different portfolios. But again, I don't really know what it means for the future of cryptocurrency. I think if especially in tokenomics, I think when we're conceptualizing economies and trying to understand what regulations might unfold in the future, we look to traditional finance to try and predict like what could happen, what these structures might look like, because that's what exists already. And that's the inspiration that a lot of regulators are going to turn to when they're trying to figure out how to regulate these assets and things. And I think a lot of regulations and infrastructure on traditional finance is, maybe bent, not broken. And there's a lot of room for improvement. And I think, I don't know if anyone's really in a good position to help influence that in a certain direction, but I agree. Like, I don't think there's any stopping this. You know, what I did want to bring to you, Rodrigo, which, might not be your forte, but what do you think? What effects do you think this will happen or this will have on the market immediately after a listing? Do you think this is priced in, or do you think this is something that's going to catalyze some sort of big movement? And how will that affect your work?
So let me just put my cards on the table there. I'm perfectly okay with BlackRock, and not simply because I'm self-interested and want to see a bit of revivification in the market, but I'm just fundamentally okay with it. I'm sort of like, in one sense, I'm doubly cynical. I think Bitcoin's already a manipulated market, and
Yeah.
actually
Ooh,
getting
hot take.
uh uh hot take.
No,
Let's
no,
see.
you're right. You're absolutely right
We
there.
this we got another FUD article from the Financial Times, and what were they saying? It would only take, we're dealing in big numbers, but they're small numbers. It would only take $23 million to move the price of Bitcoin by 1% in the liquidity we've had in the past year. It's already, it's a different group of insiders, but I think there's this hope of a decentralized coin gives far too much cover to a lot of BS. And
100%.
paradoxically, by opening, and this was the SEC's objection to the spot Bitcoin BTF, is that they say that it's too easy to manipulate the market because liquidity is so thin. But they tripped up. The reason why it got approved, was on the grounds of an inconsistency. The SEC had given approval to a Bitcoin futures ETF, and then the judge says, "Well, hold up. If you said that the futures market is okay, then why isn't the spot market okay?" So
Mm,
that's the grounds on which they were allowed to, you know stop the SEC and potentially create this sort of like greenlining situation for the ETFs. And I think it's okay. I really think, at the end of the day, in the long run, if there's a competitive advantage for Bitcoin to be accessed without the mediation of this investment vehicle, of an ETF investment vehicle, someone will offer that. Someone will serve that to people, and this is a great bridge to get people into crypto assets more broadly. And if there's a
Mm.
competitive advantage, it'll be taken away. But I'm happy to see more liquidity, more value in the market. That will make it less easy to manipulate, and brings legitimation and all these things, to the crypto sphere. In terms of what I think is going to happen, obviously, I think the price will go up. How far, I don't know. But I really do wonder, all these people sort of wringing their hands and going, "Oh, fun times at the casino again." I I've really felt like a fish out of water going to work in a crypto market, because all of these
Yeah.
guys saying to the moon, and I think I'm fundamentally a pessimist. That's why I'm taking studies in risk management. That's a career path that rewards pessimism. But so
I
I've been
agree.
miser I've been miserably happy over the past 2 years with everything that's been going on. But it's so. Do I think where everything's going to go? I find it hard even to see that everything's gonna explode in quite the way that it did before, I would expect value to redistribute to other major assets, Ethereum,
Mm,
Chainlink, things that are established. But will we see there'll be these little I'm sure there are gonna be these little explosions of meme coin frenzy because, gosh, if we've had them during the bear market, then there'll be more of them when we're out of it. But will it really be IDO season the way it was before?
ooh, I don't know about
I
that.
mean I mean, it's still really unregulated. If you're outside the
Yeah.
US, there's still very few things. There's MiCA requires you create sorry, that's the European regulation on crypto assets. That creates some liability for projects who create white papers to actually deliver on some of the contents of their white paper. I saw something posted by a lawyer in Dubai saying that regulations there require you to deliver on your vesting agreements that are published in your white paper.
Mm,
But so far, the amount of regulation that crosses over into that IDO space is really limited. The largest centralized exchanges aren't allowed to list, but everybody knows that you can just go to a DEX or Launchpad and do what you like there. And going back to the previous point, like the smaller the markets are, the thinner they are, the easier it is to manipulate them.
yeah.
I don't know if people have that as much money in their pockets. I hope they've become a little wiser to the ways they can be deceived or conned. Or I don't know. I don't know. Maybe there will be so much excitement and that everything just kicks off again. So
There needs to
yeah,
be
I'm confident in the majors doing well out of this, and I'm agnostic about what it means for smaller alts, new projects. Will serious investors just want to get in on something that's going to pump and dump again, or will they say, okay, no, we now want to do things differently. We're well capitalized, but let's take a longer road to market. Let's build out some tokenomics and token economies and test them before we go live. Yada yada.
Yep.
So and let's not forget. Okay, let's just put this zoom out in the bigger picture. Interest rates have not been this high in 20 years. And 20 years ago, the in the US, the amount of private debt to as a ratio of GDP, the output of the entire country or all US companies was half what it is today. So with this is the first time we're going into a higher interest environment when the private sector has twice as much debt as it did before. So we have grown up. All of us are about the same age. We've never seen high interest in a high interest environment, and we've never seen high inflation. So
That's
I
a good
think
point.
it's unclear how this is going to play out in the old free money environment where interest rates were zero and it didn't matter how much debt you had because you could always refinance at low rates. That was okay. But let's see. So there are new things in the mix that give me pause for thought. So I'm long run bullish, and the majors are going to do well, but everything else, let's see.
Yeah, I mean, that's a really good point. I think, investors might get the exposure they want in the markets from some of these products, and they might just play the risk averse game around, the venture world and what's happening. But speaking of the venture world and traditional financial instruments, I think there's a lot needs to happen in the way of regulation for some of these traditional financial instruments to move and make their way into the cryptocurrency space, especially when it comes to legislation and regulations around things like real world assets or things backed by real world assets. And with that being said, we want to introduce our next two guests, who are the CEO and CMO of a very interesting startup that recently came to market. But before we do that, we want to go ahead and share a video of what this company is all about. We're talking about soil. Here we go.
Nobody would that this will become our new reality. The stable world turned upside down, falling banks, declines in the crypto market, bankruptcies and collapses of the crypto projects, conflicts, a climate crisis, immigration crisis, inflation, and all the errors that we overlooked. Creating the system got revealed. And we were struck by huge changes. What do we need in the world run by chaos? We desire stability and peace. From the combination of thoughts about these values and the analysis of market mechanisms arose soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets. Real team, real yield, real assets, real money. For real.
Woo! Man, what an intense video. And so we've got Michael Mashuk, I believe, who is the chief
Right.
marketing officer, and we have with him Jakub Boyan, who is the chief executive officer. Guys, welcome to the show. Very nice to have you here. How you doing?
Hi guys. Hi guys. Thank you for having us.
Welcome,
Yeah, thank you for
welcome.
joining. Yeah, we
Great.
mentioned
Great.
before,
Great.
you guys are brave because I mean, this is only our second episode, but you were the first team to take us up on our offer and to reach out and speak with us and to answer back to our video. So we obviously didn't know a whole lot about soil going into that video, but you know, with your guys' help and a little bit more digging, we were able to learn a little bit more. But if you would be able to give us like a high level overview of what soil is building, and I think this is right on subject for what we were just talking about too. So perfect timing.
Yeah, sure. Perfect. So Jacob is CEO of our project and I am CMO. We are both co-founders of the Soil. You know, we are from the traditional market. I am the startup builder. I built one media company and sold it and had an exit 2 years ago. With Jacob, we built a working on Polish markets on salary on demand market, and we had exit a couple days ago from the business after 3 years.
Congrats.
Yeah, thank you. And but 2 years until now, we are focusing on soil. We are building the project on from 2 years, and we are focusing on the things you mentioned earlier on your video. So we are focusing to be fully regulated, and we are fully regulated. We are focusing on blockchain as a technology to bring new quality for the traditional finance space, especially for private debt, because we are partnering with private debt fund Mount, which is based in Poland. This is one of the biggest private debt funds in Central and in Southern Europe. And yeah, probably Jacob will explain you more about what we are doing and how we want to bring some fresh air to the crypto space.
Bring it on.
Yeah. Once again, hi guys. My name is Jacob. I'm the CEO and co-founder of Soil. Thank you for having us today. Yeah. So actually, that was what you said before about what's going on with the private debt fund, private debt in US, and it's not only in US, but it's global. Yeah, in a higher interest rate environment right now, and the banks are limiting the financing activities. Private debt funds are right now thriving. Yeah, so it's the best time for them. And what we are doing, so a short introduction about me. So I for many years worked I got a broad experience in the corporate finance and traditional finance. For many years, I worked in mergers and acquisitions in EY, BWC, then for the leading media and e-commerce companies in Europe. Also rendered some transaction services for the leading banks in this part of the Europe, working with the main VC funds on the buy and sell side. So for many years, I worked in a traditional finance, and and seeing what is the opportunity and what opportunity gives us technology, blockchain technology, and how we can improve the a bit obsolete infrastructure, financial infrastructure right now. Let's say let's call it, let's say, a web tool, and how we can improve the settlements, how we can make a transaction smooth, how we can get a truly access to the global capital, limiting or simply removing any barriers, transaction costs, and so on. So simply improve the obsolete financial infrastructure. And that's exactly what we are doing. So for us, I know that this is like a lot of people are saying that I'm in here for the tech, but to be honest, we are in blockchain and in crypto space for the tech, not for for hype, increase in prices and all the adrenaline and so on. So of course, this is a part of the rodeo. We've got a totally completely different strategy. So you mentioned the regulations and so on. So we are, I guess, one of the first fully regulated lending protocols that is registered in the European Union. Our entity is in the European Union, and we are fully compliant with the regulations. Not only we validate our business model with the legal company, because that's the first step, of course, but we also ask the financial authorities to verify and approve whether our business model is compliant with the regulations. And we also analyze our business model in not only in the light of the current regulations, but also in comic regulations in the European Union. You mentioned the MiCA regulations, and we are also in line with these regulations. So what we are doing, because so we are simply solving the problems or improving the infrastructure, improving the settlements not only in a crypto space, but also in the traditional finance. And what is funny, we are, let's say, a bit conservative in the crypto space, and we are very, modern and called in the traditional finance, because we are like a boring lending protocol for the crypto space. We are providing a stable yield paid in a stable coin. So if you've got a stable coins, you can earn a passive income that is paid in a stable coins. Yeah. So I know that you've got like a many buzzwords right now in DeFi, all this liquid staking, some farming strategies, and so on, so on. We knew how it ended up last year with a collapsing of the Tira ecosystem and so on. And we started our project 2 years ago. And I remember when Mike said, "Hey, Jacob, how do you think we will compete with the Anchor protocol? They are operating 90%. We cannot afford it." But, there is no like a new economy and the old economy. Yeah. So at the end of the day, the laws are the same, but the tools are different. Yeah. So we knew that they will either adjust the yield or they will still collapse. They at the last days of the Anchor protocol, they implemented the mechanism that somehow adjusted the yield depending on the interest rates and what is the supply and demand. But the time they didn't have enough time, I guess, to adjust it properly. So they collapsed. So we know what is the story. We are simply taking a stable coin. So describing our business model very, very simply. So we are taking a stable coin because we are only working on a stable coin. We do not want to take a risk of the volatility of the underlying asset like a Bitcoin and Ethereum or other assets. So we
Yeah.
are the offering crypto investors, crypto friendly banks. So people that park the stable coins or keep the stable coins in the wallets, we want to offer them stable and passive income with a transparent source of the yield. Because there is there's the saying in the crypto space, if you don't know what is the source of the yield, probably you are the one. So we are the transparent. We are showing exactly how we generate the yield, what is the source of the yield, and what is the most important thing, how the yield generation and how the process is backed and how it's collateralized. What is how we mitigate the risk investment? Yeah, because of course you can simply stake the tokens and you got some numbers in the protocol, but actually you don't know how it's generated. Yeah, you can get some ideas, but you don't know at the end of the day. The same with the Celsius. They offered like 18%, and they said, okay, we've got some investment strategy, but at the end of the day, we didn't know what was the behind the scenes.
So
So
I
we
like the, I really like this approach to a conservative, realistic yield. It's
yes.
not sexy, but it's safe, right? And
So
it's this idea and this buzz term. Carmelo and I joke about this all the time. Real world assets, RWAs, is quickly becoming like the new hype cycle in crypto. So what are real world assets? Like they're just assets. Why are we calling it real world assets? But
Yeah.
please give us an idea of what kind of assets are you collateralizing these instruments with? How do they generate yield?
Yeah.
And what did that sort of regulatory pathway look like for you guys in order to implement that?
That is a great question because if you dig a bit deeper and you analyze, because right now the reward asset is a buzzword.
Yeah.
But if you know, if you analyze what does it mean real world asset, many protocols it's equal to treasury bills, US treasury bills, because they are
Yeah, it's true.
some stable coins or they some coins turned and invest into treasury bills because it's first of all it's easy or it's easier and it's let's say safe and it's liquid. They do not give you any value added because they are some intermediaries, yes. And of course, this then in such a scenario you got some roof because the roof of the yield is simply limited by the what is the yield paid by the treasury bills or
Mm.
bond issued by the US. And actually, the protocols, this is strange because they are saying that they are like a DeFi, but at the end of the day, they are financing the Fed of the US. It's not me to judge, but it's easy. What we are, and you can assess whether this is a real world asset or whether these are simply the financial assets or simply treasury bills and so on and so on. But if you will see the breakdown, you'll see that the vast majority of the protocols simply that are based on the real world asset. Real world asset means bonds, corporate, and this is a government bonds. What we are doing, our approach is completely different. First of all, we are working with the private debt funds, and we are responsible together with the working with private debt funds, and that got a experienced risk management an experienced team that is responsible for the risk management and for the screening the companies and taking care of the whole process of lending money to the corporates. So it means that we've got an investment team that is responsible for the whole process. So it's not like only investing in a bond. Yeah, let's assume that the corporate that the bond of the of the US government has like a 0% of the default. Let's say it's like a safe, yes, safe haven. In our case, when we are working with the private debt funds, the investment teams are responsible for, first of all, taking care of the profit of the screen. The company is doing a proper due diligence, and they then negotiating the collaterals because it's very easy to lend the money. The tricky part is to get the money back. Yes? So, and to mitigate the risk of the default. In our case, to, 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 to generate something extra. So on top of this risk-free premium like it's a risk-free rate that is for the corporate for the government bonds, you need to do your job, and that's what we are doing. So that's why we are able, first of all, to generate and provide crypto investors a higher yield, but we are actually financing the companies that are that are operating in a traditional finance, and we are granting them loans, and these loans are backed with the real world asset. But the real world asset, it means that, for example, if you are granting a loan, the company that is producing, let's say, furnitures or invest or building some buildings, yeah, or investing in the real estate, or you've got like a factory that is producing oil or whatever, you got a loan. You got a loan agreement with them, but they need to provide the collaterals, and you've got like a diversified basket of the different collaterals. Like you've got like ownership title to the equity, mortgage. You got a land plot, a real estate, personal guarantees, escrow accounts. All these different assets actually that serves as a collateral. And in case of the default, then we use this collateral simply to turn it into money and use this money to pay back the loans, the principal and interest. And that is a different approach than other protocols. Yes? And each pool, our protocol is equally secured. Yes? So it means that this is a job of the investment team to take care of the whole investment process to be sure that the money will be repaid from the corporate. Mount TFI is one of the leading private debt funds. Nick, unfortunately, he was not able to be today with us. For sure, he's an expert in a private debt area. He would explain exactly how the process looks like and you provide it with a more all details. But he's a co-founder of Soil, and he's also founder of the private debt fund Mount TFI. And with a proven track record for the few years they are on the market, the acceptance rate, that's the crucial part. The acceptance rate for the corporates applying for the loan in Mount TFI is around 7%. So it shows that it's conservative approach. Yeah. So it's not like, okay, I want to borrow money. Yeah. No, you need to be sure that the money that they will repay the money. And on the historical data, the default rate for the fund was below 0.5%. And the reserve fund kept by the fund is around 1%. So the reserve fund is higher than on average the default. So for us, we want to chase. We do not want to, saying, okay, we are better than other protocols. We don't want to say, okay, we've got like a clever idea in the new economics that we will, somehow created some new economics that will create the money. No, because I studied economics. I'm also a part-time teacher in a high school. It just is like part of the hobby. It's like my mission. Yeah. So it's, yeah, because,
Sorry,
so,
noble.
and for me, it's like, it's like the economy is the same, yeah, but the tools are different. Yeah. So we are saying, okay, for the crypto investors, we want to provide them secure, transparent, and fixed source of the yield and paid on a stablecoin and paid in a stablecoins. As we are generating revenues in the traditional finance, we are not dependent on the sentiment on the crypto market. Because when you had like a Terra Luna or other, if the part of the yield was paid in the token. So let's assume that everything was perfect when the price of the tokens went. Yeah, then you sell tokens, you can crystallize it into the yield. The problem was when there was a bear market, everything was going down. How many tokens you can print? You can print more and more and more, but at the end of the day, it won't work. Yeah? In our case, we do not care. So of course we care, but we are not dependent on it because we are generating cash flows and we got a fixed cash flow
It makes
with
sense.
the money. So we can bring back this money and pay the yield to the crypto investors. And that's what we're doing in a crypto space. But the beautiful part, and actually that's what we are targeting, because the corporate debt, the market is around $14 trillion all over the world. 14 trillion. So let's have a drop of it and we'll be like extremely successful. We know that right now there are very limited numbers of business model in the crypto space in the DeFi that got a substantial business model behind it. The crucial thing is to increase the adoption of the traditional business models into the crypto so that they use the technology. And that's what we are doing. So I always use the one example because the simple example always shows how the business model, how the model solves the problem. So let's assume that we've got a private debt fund, let's say in Berlin, in a European Union. Right now, how they raise the money? So typically they need to use the network, do a proper roadshow, and they got the funds from the different investors. Right now, it's impossible, even though that we tend to think that we are living in a global village, every digital money is used and so on. Everything is easy. You got internet, you can target everyone. But let's assume that we've got a taxi driver in Bangladesh, or we've got a dentist in New York. Yeah? Well, how the hell this managers of this private debt funds target these retail investors? Be impossible. First of all, you need to get them. Then you need to cover the cost of the high transaction cost because you need to convert the currency. Then you've got some administrative barriers. Then you've got some procedures and so on, so on. Our protocol, if you've got a stable coin, you connect your crypto wallet, and within 1 minute after passing a seamless KYC, you can allocate your stable coins, immediately start earning passive income. Yeah, and that's it. Simple, fast, transparent, and first of all, it's crucial because it provides equal access to the financial product that before were only reserved for the wealthy clients or corporate clients and so on. For example, in Poland, if you are a retail investor, like individual, you need to have a minimum ticket because it's according to the law, minimum ticket of 40,000 euro if you want to invest in a private debt fund. With using our protocol, wherever you are in the world, you can start, your passive income strategy with access to the private debt fund. If you got like a $100 or $1 million, it doesn't. So that's how we improve how we use the blockchain to improve access to the capital and decrease the cost of the acquisition of the client for the regulated and supervised institutions. Like I said, like no, that's the game changer because we are actually using the technology for using the insignificant costs and seamless settlements of the
Mm,
transactions and truly access to the global investors.
I agree.
That's
I
how
think
we.
it's I think it's a fantastic approach, and it's a very different approach from what a lot of DeFi protocols are taking nowadays. You mentioned a few of them with some unrealistic yields that are backed by who knows what and where. But, well, first of all, I do want to say I wish you guys the best of luck in bringing audience members and users into this platform. I think there's a lot of value behind it. And I think it's a fantastic gateway to get people interested in diversifying their portfolios and understanding risk management and then thinking more differently about traditional financial instruments and how they can intersect with the world of crypto. One theme that I'm convinced is common in all of DeFi and traditional finance when it comes to investment vehicles like this is that yields somewhat follow proportionately or maybe even not proportionally, but they somewhat follow what we are willing to accept as far as risk and illiquidity in collateralization of those assets. And so I do want to turn that back over to either Mello or Rodrigo and see what kind of issues or hurdles do you see here in this being able to scale or gaining interest from users or having to take you know, an L in the short term to try and bring on interest with some higher yields backed by some other types of assets.
Um,
Sorry, is your question about soil or a broader question? I
You
missed
know
that.
what? Let's start with soil, but obviously we're talking about any sort of crypto-based financial instrument that is backed by traditional financial instruments itself or collateralized or yield
Mhm,
coming from these instruments. And so the idea of, having yield being generated by, let's say, T-bills obviously is very low
mhm,
risk, low yield. You might, not gain the traction that you need with users in an instrument like this, where you might have to start incorporating other things into the portfolio that backs these assets, like let's say, some sort of revenue generating real estate or
mhm.
some risky venture in a different asset.
Yeah. So the risk management, the risk reward issues in the conventional asset space are well understood, right? There's sort of pretty established expectations for how you diversify a portfolio, and there's like a set of practices around how you advise people to have an investment portfolio. You look at their needs, you look at their risk tolerance, and you sort of set an allocation for that. But in terms of how we get, the crypto community interested in conventional investor management and portfolio management, we've got a difficult task because expectations have been anchored on hundreds of X's and we're not talking hundreds of X's. That's really Jacob was very clear to point out that this is, you're not going for astronomical yields because they don't exist in the real world or
Yeah.
they're incredibly rare. They're incredibly rare. And by the way, guys, well done. Like it shows that conventional finance has some kind of effect on our brains because everything you said sounded wonderful. I'm a key proponent of boring blockchain. Boring blockchain is the way forward, guys. Like,
Hot take.
get just do ordinary things using blockchain technology in ways that sort of begin to save. And this sort of thesis around sort of like lowering the cost of client acquisition and essentially sort of like how you manage your obligations to them it makes perfect sense. With the RWA theme, the real world asset theme, you remove three of the hardest problems in traditional tokenomics. You define what it's clear what value is. Um, there's already a market that provides a price for it that guides your expectations about your assets, tokenized assets value. And the accounting problem is entirely removed because you know how many units of tangible stuff there are out there. So there's no question about what your token supply should be. You have tokenized 10 units as long as you fractionalize them on the basis of one unit each. There's some multiple of 10. And you remove away a lot of the stuff that I'm not saying is all fake, but it genuinely leads people into a lot of confusion and a lot of difficulty because managing those other freedoms come well. So again, Jacob made this point that we start out with something very conservative, very familiar, and then
Mm.
maybe we add these small elements to it. And that's the same way a good game economy would be designed. They don't go to market and say, "Hey, here we go." No, they subject it to loads of testing, loads of testing, loads of testing. It takes ages. So I think it's really gonna be this sort of like adjustment of expectations to say, "Hey, traditional investing's boring." There was this sort of explosion in 10 years ago, these sort of robo-advisors, these platforms where you could go with your savings accounts, and they would allow you to sort of diversify your portfolio and show you how much further the curve would go up. So those kind of educational products that give people a sense of ownership and in the way they diversify the assets would be really interesting, but we have to sort of climb down and think about what realistic yields are in the crypto space. And as long as there are all these people, as long as this very deep rooted culture that says that, the moon going to the moon is possible and that don't believe all of these tradfi boring bros, they're out to steal your money. And this is the new church. This is the new, as long as that's the quality of our debate and expectations, where it's going to be a tough shift. I actually think the change will come in from the other side. It will come in from ordinary people using a product like soil, and it's like, hey, this is better for me. And
Mm.
I see the change coming from that side, if I'm
Yeah.
honest.
So no, because we've got like a two different, let's say, approaches to our customers. Because that's we do not want to fight for or argue with the people that are looking for 10x, 100x, and life changing money. Because the product is not for them. Maybe we want to say them, okay, if you somehow uh, you realize kind of or you take some profits, maybe it's a good way to park some profit, but it will be challenging for them. But there are bigger there is a bigger fish to fry. Yeah. So first of all, right now we are working on the integrating with the one of the gaming blockchain, and we simply they will outsource like running the treasury. Moreover,
Hmm.
for us, it's on even on the white label basis, integrating with the, let's say, crypto banks. They can offer saving accounts for their customers, and in the back end, they can integrate with us, and we can generate like a saving account. We can offer the yield of the saving accounts for them. For us, it's crucial to generate and increase the total value law. It doesn't have
Mm.
a direct, through our protocol. For us, either integrating on the back end with the crypto friendly banks, family offices, when they part of the right now, after what happened in March with a Silicon Valley Bank, it's it turned out that it's good to maybe even keeping the money in a bank, it's not so safe. So maybe it's good to a bit diversify. So we heard from some family offices that they are saying, okay, maybe it's good to have of course, it's for to begin with a small amount, but like let's say 2-3% in a stable coins on the chain. And we are saying, we are reaching out to them and saying, okay, so maybe it's a good way to park this money that you got it on your wallet to our protocol, because we are generating the yields for your passive income and so on. And you got we are living right now in the times when we've got a high inflation, so we can somehow mitigate so limit the hit that's on the so on. So for us, of course, the retail investors, it's a one thing, but at the end of the day, the volume is in the institutional investors, and by offering the products for the customers and so on. So integrating on the white label base with them, That's our main goal. Let's go
And the
And
people
what stable coins? Oh, sorry.
USDC.
no problem, Mike.
USDC only?
Yeah, USDC only.
Okay, got it. Anyway, that
Um,
was a quick one.
but guys, people are more and more used to the blockchain as a technology to use the wallets. So my idea is that all the bull runs, bear markets, all of a lot of projects made a blockchain uh, closer to the consumer, closer to the people, and using the blockchain technology in the traditional finance. So why we are using traditional finance and new finance? All is finance and economy. So bring the blockchain to the finance and bring the blockchain to the economy, release intermediaries and put the technology behind the scenes, and the process will go smoother. And
Yeah. The funny thing is, you said before about you talked guys about the ETFs. Yeah. So I saw that a few years ago. I'm in the crypto space since 2017, so it's been a while. And everyone said about how the Bitcoin will simply destroy the all money markets, all these big guys from the Wall Street and so on. And right now, everyone is waiting for the approval of the ETF, and the BlackRock will invest the money. That's the funny thing. Yeah. So that I I really believe in evolution, not in a revolution. Yes. So we need to simply step by step adopt traditional finance and use or merge or use the technology, and that's how we benefit. Everyone will benefit from it. Yeah. So it's evolution or the revolution. But that's my side. Yeah. I understand.
That's
Maybe a little
also
biased.
it's
I
also
think
Jeremy Allaire's line from USDC. He says the same thing. So you're in good company, Jacob.
I think that business development strategy that you guys have taken is very, very strong. That's a great strategy. And when I think about crypto assets backed by real world assets, this buzz term we're all familiar with, RWAs, honestly, the first thing my mind goes to is not traditional financial instruments. And so I have this like pie in the sky vision of maybe some sort of on chain ETF that consists of a wide variety of different types of assets that it's collateralized or backed by. And like this, I'm not sure if you guys have ever been to like maybe an American buffet and then you get a plate and then you fill it with like, some lobster and then like a cupcake and, like some rice and just a bunch of this different stuff. And it doesn't make sense like a kid in a candy shop. But, I want to actually turn the conversation to Carmelo because I know you're very passionate about different types of RWAs that might be value accruing in the long term that can be used to back crypto assets. What kind of assets do you want to see like in the future that can back, let's say, crypto financial instruments like this?
Yeah, let me just start by saying I'm also on team boring blockchain. So I
Oh,
think we inhabit that space between the two worlds. Like we don't quite fit in either way. We're not traditional finance people, and we're way more boring than most crypto people. And some small sadistic part of me wants to see people get wrecked so they understand that these yields are unsustainable and know what actually 14% is pretty damn awesome. Like I remember last bull run, if people were smarter with taking profits, parking them in stables, and then using some of the pre-existing DeFi protocols and earning even a modest yield on their stable coins, they might not have made as much money in their head as they wanted to, but they would have saved themselves a lot of pain. And yeah, going to your
So
RWA question,
you are a dreamer that want to change human nature. Yes.
oh
yeah, I mean, I want to teach people a lesson in crypto. I want them to know the pain of like traditional investment, like or like Roderick said, like
But
it's boring. You can't expect so much magic. Like obviously, it's possible. I've made some very lucky, very good investments in the stock market, let's say, but it's rare. In crypto, people are expecting to gamble on some frog Pepe coin and go 85x. Like the first time I heard X, in crypto. In terms of ROI, it blew my mind. I was like, "You're kidding me! Like, I can't believe people use X. This is the
Yeah,
unit that we're using." So that's insane. But I'm glad to
Uh,
see stuff like
yeah,
this because I think it's important to have some stuff that helps
see that
you earn yield on your stable coin, and it's a little bit more safe.
right
And
now, a lot of expectations. Let's say 1x is nothing. Yeah. So it's 100% because 1x is a 100%. It's nothing. You need to have like a 3x, 10x,
yeah,
yeah,
1x.
Growth,
guys,
right?
try to make an IDO now. If your token don't go 3x, you have some kind of security claiming option from the launch pads, uh, and they can put out
Refund, yeah.
the refund
Is
invest.
that's
It's
where it's set
yeah.
3x. They're
Yeah, yeah,
Yeah.
arbitrarily.
So,
So
guys,
let's be precise. It's not a,
we're out.
it,
it's
it's
Wow.
about the expectations, more about the expectations. Yeah. So it's not like,
Yeah, yeah.
very good pun.
in a
this.
space.
Expectations.
This makes my point, like
You know,
traditional finance, you have a lot of risk in for not a lot of upside, but here you have no risk apparently if you're a retail investor in a launchpad. So you're good to go no matter what. It would be stupid not to put your money in a launchpad right now if they're guaranteeing a 3x, and if they don't do that, then it's either a free lottery ticket or you get your money back, which is
that's
so stupid. And I want these people to learn a lesson. I want them to know that investing's hard. It's not for everybody. I mean, everybody should invest in some capacity, but you can't
but
guarantee somebody. You can't say you're gonna be rich and retire when you're 35. Just invest in these tokens. It's insanity.
but I
Yeah.
assume that this is a part of the market right now because during the bull market, you didn't have a chance to get a refund because everything was oversold.
Yeah.
So and it was extremely difficult to get your ticket. Right now, there is a less liquidity, so they came up with some let's say risk-free investments on the launchpad, and I assume that they will stop offering it as soon as the bull market will come back. So this is what
Hope
was
so.
meant simply to I guess to attract new customers. But this is I I don't like it. But to be honest, you need to acknowledge that Launchpad somehow adjusted the strategy to the changing market situation for them.
Yeah.
Mm,
Guys, you just met bear market specialist because we started to build our project when Bitcoin was on ATH. So the bear market guys are here.
We started a lending protocol during the tsunami of the collapses. So it's
Staying power is real, right? And this is a real thing I think a lot of people measure nowadays. But one thing I want to do is I want to take this concept of real world assets, whether they're backed by traditional financial instruments or something else, and start pivoting back towards tokenization of real estate, real world assets. I think you guys know where my head's kind of sitting here, right? We've got a massive movement happening. A lot of people starting to think, how can I tokenize assets on the blockchain, offer partial ownership, and then ensure that that is somehow immutable and it's legitimately owned by anyone that is the holder of an on chain digital asset. And I want to kind of turn this back towards you, Rodrigo, because you are in a very peculiar place to not only understand how the tokenization of some of these assets might work, but you also have a very, very nice in view to the world of, let's say, government regulators, et cetera. And I believe you had interviewed Boris Johnson earlier this year and talking about adoption of cryptocurrency economies in the world of traditional finance and also by government regulatory bodies. And so I wanted to kind of bring this to you and see, what do you think is holding back true tokenization and recognition of tokenization of real world assets?
Yeah, I didn't actually end up getting that much insight from the interview. We created a whole bunch of questions based on initiatives that his government had taken to become crypto friendly, and the team came back and said, nope, none of this. You only get to ask these two questions, and he
Man.
didn't even have an answer to one of the questions his team had prepared, which was interesting. Anyway, but yes, I'm interested in regulations. I'm interested in this whole side of thing. Coming from more of a TradFi perspective. Laws the law and legal instruments were effectively created to secure economic rights, right? That the whole body of commercial law was designed to basically be create some of the same end goals that we want to create with blockchain protocols, but we use this whole other tool set that's ultimately, yes, backed by violence and hopefully some softer emotions along the way of discomfort of doing something that is dishonorable to your business partners. So when we think about digital assets, when we think about assets and the benefits they give us, I think we can simplify in saying we're in either one of two cases. Either the benefits yielded by these digital assets arise from a digital experience, in which case the benefits of the asset are entirely digitally contained. I think that applies for things like games and entirely digitized content. And in that case, you know, in principle, we could start off by saying that everything can be governed by a smart contract, and that's all there needs to be. But when we're talking about real world assets, what that term really is a proxy for is material world assets. You know, if we want to get philosophical, anything's real, like the digital world is real, blah blah blah. But it's basically a proxy for assets whose value really concretely is identifiable and originates in the physical world. And but the physical world is not controlled by blockchain or protocols. So you now actually have to have this ultimate interoperability project, right? Where, you know, we talk about blockchains becoming interoperable with law and law becoming interoperable with blockchains, because that's the point when, you know, we get to use our physical world sort of technology to create secure economic rights for people who possess a digital blockchain token. Now, there's some interesting potential evolution when we get to Internet of Things, where potentially the hardware itself is controlled by blockchain, and the hardware maybe creates you know, access to physical benefits. But I'd say in terms of the big bridge we have to get, it's like it's all legal. It's all legal. If
Yeah.
I buy this NFT for you know, rare whiskey, does that mean I actually get to have some of that whiskey? Or is that just a claim on the financial appreciation of that whiskey cask?
Yeah,
That's
but one
that's a
thing,
that's a right that's only gonna be settled in law. Yeah, that's all I had to say. Jacob.
yeah,
100%.
that's a great point. But I would like to add one more thing to what you said, because I 100% agree with it. But the other cases, even of course, right now the let's say the as it always was, so the regulations are behind the technology. Yeah, so they need to catch up. That's natural. So you cannot have like a, let's say, ownership real. You don't have like a real estate in a truly tokenized form that you can exchange one token for the 1 square meter, for example. Yeah, because as for now, regulations simply do not allow you to do it. But I heard about a case in Brazil, I guess, that it's possible. But let's say in Europe, in US, I guess it's impossible. But one thing that I wanted to add to what you said is that the one thing is that you've got a ownership title to this whiskey, but the other thing is if it's still the same whiskey as you bought, yeah, because even if you've got a real estate or you've got a real assets, you need to have some party that will take care that it's still what you bought, yeah. So there can be some other whiskey, even though that you've got a ownership title to the barrel, but inside the barrel, it's when you do not have like the third party that is taking care of of this ticket and ensuring that the asset, the same asset as you got the ownership title. And we've got this, the perfect case was with a Circle and with the USDC. So they had you got a digital representation of the dollar, but they trusted banks because they kept the part of the dollars in bank. And when there was a problem with the Silicon Valley Bank, there was a threat that they will lose the money. And even though that you've got a 100% sure that you've got a, because they took care of their legal framework, but still the actual asset evaporating, yeah, or there was a threat that it will evaporate. So there is still blockchain helps, but do not solve all problems. When we see that even if we take care of the solve the regulatory problems, we still got the problem and exposure to the, you perfectly said, material asset, whether this is still material and do you know where it is, you process it and so on. So the same with the frags, for example, it's like a gold, and you still need got the cost of the storing the gold and so on, taking care of the security and so on, so on. So we got a blockchain is a breathtaking technology, but it's not like an antidote to every problem.
Just to add on your point, Jacob, there's this really interesting concept about real world asset tokenization, let's say high value assets, for example, real estate or a business, something of this nature, where you can attribute the ownership of this asset to a DAO or decentralized autonomous organization. That's really what the tokenization of an asset is, right? You're creating some sort of new company or foundation that owns and governs this one particular asset. And so these are the issues that you run into in specifically what you're talking about. Like, who is the custodian of this asset? Who is the property manager for this building? Or who is who's the garage custodian for, this rare vehicle that we just auctioned off on some tokenization marketplace? And there's a lot of progress being made in this field right now. And there are governmental agencies that are recognizing these types of DAO based corporate entities that do hold legal ownership of these assets. And these entities are able to structure, let's say, platforms, or they're able to structure foundations and white label potentially technological solutions that allow them to provision service professionals to, let's say, manage a property or things like this. Obviously, this is not nearly perfect. There's a lot of improvement that needs to be done, but I think it's a great step in the right direction. And so, with that being said, it's kind of like a nice segue into a question I want to ask you guys. Like, what do you think is holding this space back as far as like standards and processes? Because even these corporate structures are not common globally. I think one exists in the US, one might exist in Dubai, but these are things that are not adopted because many jurisdictions are just testing the waters, really. Anybody?
I'll volunteer. I'll
I know
volunteer.
you want
There's
to.
uh, um, I mean, I read a paper last time we saw each other, Sasha. I told you I was very excited about reading a paper by no, someone who's a senior legal counsel for the International Monetary Fund, and he's looking at the way that commercial law and blockchain intersect, and it's fascinating because it starts off with a historical perspective and then looks at kind of all the instruments. Think of it like all the tokens and protocols that exist in law as we know it, and compares and says, oh well, these ones meet here, but these sort of like are out of fit here. I think what we're missing is a good faith discussion with established authorities that's willing to be open minded about some, this technology is sort of like when don't ask a fish about water. When you've done something a certain way and you've only ever seen it done one way, you can't get your head outside to think about how it could be done differently. And some of the sort of things that in traditional law have always been very tightly coupled together suddenly exist in an unbundled way in the technology. I'm being quite abstract. I can't give you examples, but essentially that in law, as in with finance, that invites you into quite deep questions about what the thing is, what you're trying to achieve, what is money, what is value, in a financial case. So we need to have a sort of discussion where people look at the freedoms of the technology and resist the temptation of being cynical. And so it's like, oh, you just want all these freedoms so you can go sell drugs on the internet or whatever it happens to be, and really think, okay, is this actually an opportunity? And that, like I said, this was a paper published by by the IMF. We are starting to see these things happen, but as I've gone in my quest to understand regulations, there's some regulations that are only came into effect in January this year that were drawn up in response to the financial crisis of 2008, Basel III.
Yeah.
Okay, that's how slow the biggest regulations move. and they are conservative to a fault. So it's going to be really, really, really slow, and another one of the reasons why being conservative in your business plan, your business strategy, I think is the way forward to start getting traction and adoption. But we're seeing, things will catch up. There was a discussion by EY about legal. There's certain things that are weird, like, okay, these entities are interjurisdictional. There's some thorny issues, but people are beginning to think about them, and this wave of TradFi adoption of RWA interest in RWAs which which has a sound use case, which is like, lowering costs around customer acquisition and all the, once that integrates with auto KYC and auto AML, sorry, know your customer, anti-money laundering. Once that's sort of like deeply woven around some sort of like identity feature or some smart contract thing, that it's inevitable that this will be the way that things are done, and more attention will go into creating these legal structures. But
Mm.
it's basically just starting to turn. It's sort of like this chicken and egg between adoption and solutions, and as long as we innovate and we get adoption with the most conservative approaches, we'll see the rest follow, but it will be slow. Just like it
Yeah,
won't be exciting at first, it's gonna be slow because regulations are that's
I
just
got,
the way they work.
I gotta, I completely agree with you. And actually, that's our bet. So we know because as for now, we are saying that we are a hybrid protocol. We are not DeFi for sure. We are not, but we are not a CeFi. So we are like a breed between. Why? Because of course we know that to increase the adoption, we got some barriers mainly related from the lower adoption and the regulatory barriers. So it would be great for me, let's say, to have a offer some companies, some corporates, offer them loan and get all collateral on chain, like ownership title to the equity or real estate and so on. It would be 100% transparent, and I can show everyone that what is the value of the of the collateral. But unfortunately, as for now, it's impossible. But we know, and what I'm sure, we don't know, but I'm sure that in the future, simply it will be available because it's all about the technology, finding a solution to make some transaction smoother, cheaper, and so on, so on. But as for now, it's impossible. But our bet is to, as for now, building a bridge and be the protocol that connects these two worlds. But we know that when the new regulation will be implemented, more and more financial infrastructure will be moved towards a blockchain, and then we will be ready because we can add more and more puzzles to the. We will move more toward the DeFi. But as for now, we are a CeFi, and exactly what you said. So it's I believe that it takes time and needs to be like a step by step, and then we will find out that we simply are using so much. We're using the blockchain that it will be like a pressure from the financial institutions or corporates and so on to simply adjust the law because somehow they will start using the more and more this infrastructure. Actually, no, in the, in Poland in the morning I read a report about the using a contactless payments. Poland was one of the leaders in when the implementation when you are not using a card, but you are using a contactless payment. Today in the report, I was shocked. 92% of the transactions settled by the card was used in a contactless payment. We've got 40 million people in Poland. 92%. So it's like I'm shocked. But you know, because it was so easy and it's so like a natural to using a Apple Pay or simply contactless payment with your card that people simply are using it. And right now, no one is thinking about okay, how we do it, how it's settled, and so on, so on. It's natural. And I guess that it would be the same with the blockchain. More and more companies will start to use a blockchain, either a private blockchain or other blockchain, simply to improve the infrastructure, simply to enhance the processes, internal processes, and somehow they'll say, okay, right now we are using the blockchain. So maybe some politicians responsible for the regulatory should adjust the law because we are using it and so on, and change the environment. But unfortunately, it will take time, step by step. So that's my That's my vision for it. And that's how we build our protocol. So we are building an infrastructure that's ready to add more and more puzzles along the way when the new regulations will be implemented.
You
I
just
know.
reminded me. I just saw a video last week of, I think it was like when they just debuted credit cards, and it was a reporter, a local news reporter at a Burger King, and just covering like, we don't know what this new technology is going to do. It's people are pissed off. They're waiting in line. It's going to take forever, and people were just losing their minds over the idea of paying for a $3 burger and fries with a credit
Yeah.
card. And now when you look back at that, it's like a relic in time. It's absolutely hilarious. But I
Yeah.
think you're right. Blockchain's going to be the
Mhm.
same.
And I,
Governments are gonna use it. As long as the back end's there, we don't need to know how it works. Most people don't care. They just want to know that it works.
do you know how the Apple Pay works? No one cares because simply
Yeah, exactly.
it's seamless.
It's a great point.
Yeah.
I think there's a couple of common themes here, right? We've got frictionless, we've got user experience, and then for adoption, we've got standards, protocols, procedures, and regulations. And I know, Rodrigo, you and I talked about this a number of times. I think more recently, we talked about how surprising it was to find a lack of standards within the structuring of individual smart contracts, because we were talking about data analytics on chain for building better tokenomics models. But in something so simple like audited standard smart contracts, where people are using a different variable name for something like vesting, that blows my mind. And so I wanted to turn that back to you, Jacob, and you, Michael, and understand, give us a brief view into the future of soil and what you guys hope to achieve as far as the different types of real world assets you want to incorporate into these instruments, and what sort of regulations, standards, or processes are currently your main concern about getting there right now.
So for us, we've got a quite straightforward path to scale up because we are granting loans to the various companies from the various sectors. So as I said, for the to begin with, the portfolio of the run by the Mount TFI that we are working with, it includes the real estate, manufacturers, factories, and so on. So it's diversified, different, but it's in the Central Europe. We are also in talks with a few different private debt funds in the Scandinavia and in US. So that's how we will scale up to other regions. And for us, as I said, the corporate debt is around 14 trillion. So this we are private debt funds that are alternative to bank loans and bonds or equity, because they know how to work with the corporates, and they know how to uh, because the processes, if you are a company and you want to get a financing from the bank for your capital to grow, or to finance, let's say, working capital, takes months. Yeah, you got like a few different stages, investment committees, and so on, so on. Private debt funds are very flexible, and they know how to work with the corporates. What kind of the experts know what kind of collaterals you need to provide, what kind of how to analyze your balance sheet, your income statement, and so on, so on. They got the risk management procedures in place, and so on, so on. So that's why they are thriving right now when the banking are limiting with the environment of a higher interest rate, we're limiting the financing activities. That why they are thriving, because they know how to grant loans with the keeping the risk management. So for us, it's quite straightforward. As I said at the beginning, we are boring protocols. We do not need to, you know, reinvent the wheel once again. Yeah. So we simply want to, enter new markets and to finance more and more corporates and gather more and more liquidity from the stable coins, and that's it. Yeah. So if we, as I said, so it's $14 trillion. So getting a drop from it would be great. We what are in a crypto space, we've got a competitors. We've had like a pure DeFi protocol like Avor Compound. I really like this because they proven to be sustainable over the bear and bull market, but they got the limitations resulting from the low adoption of the crypto. So they can offer around the 2-3% maximum stable coins, because this is a pure money market game. Yeah. So there is a demand and supply, and when the investors are risk averse, so simply they don't want to leverage their positions. as we are bringing back a tangible yield that is generated outside of the crypto, we are increasing the adoption of the crypto. And for us, this cake is huge. So we are focusing on taking a part of this cake. We are not thinking about, artificially reinventing some new features and so on to improve our business model, because this business model is it's a huge cake, as I said. But we've got the one thing that we would like to implement, and first we will focus on of course scaling up and building a total value lock, because this is our main KPI, total value lock in the protocol, as we are earning money on the arbitrage of the cost of the capital. But we also are planning to build truly decentralized DEX for that. So that marketplace, when first, as we are starting, kind of from the helicopter view, that we are putting that into on chain. So we also want to offer investors to trade these receivables and these nets, and offer them the decentralized market for it. And of course, also benefit from the changing interest rates. Yeah, because as you are entering some agreement, let's say for the 8%, 7% for the certain period of time, and then when let's say after a few months, weeks, interest rates are going down or up, investors can benefit on it. So it's like a traditional bond market, but call it, let's say, on tokenized debt. So that's our plan. But yeah, this is a plan for the soy 2.0 as an additional feature for the market and for the investors. But this is be like an additional plan for us, as we've got many ideas how to develop. But of course, with a focus on the main channel, main.
And
Well, that's
yeah,
brilliant.
and
Go ahead, Mike.
one more thing. When we build up liquidity on the protocol side, we also will run borrowing fiat money when you are pushing as a collateral stable coins.
This is very exciting, guys. I'm really, really happy to hear all of this. And I have to be fair, I think, Carmelo, maybe I'm speaking for you as well when I say, like, I think the scope of this it turned out to be much bigger than we had originally anticipated. So I'm very happy you guys got to come on and tell us a lot about soil. It's super, super exciting. I hope you guys gain the traction that you need. And the funny thing is, with every additional bull cycle and these pump and dump influencers touting 100x's and people coming in and getting burned on IDOs and blah blah blah, your target audience grows and people learn more about risk management, and they might very well turn to platforms like Soil to manage their finances. So I'm very, very excited to see what happens.
Yeah, but it's we are also aware that you would, I 100% agree with you. But unfortunately, in the crypto space, the more and more noise is created by these guys that are looking for another 10x and lifetime. Yeah, but we know that I don't want to call it niche, but we know that there are investors that are looking for the product like our. We know, but we've got like a lot of subscription for the testing the protocol, and actually the numbers talk for themselves. Yeah. So when you see even in a bull market, when other or compound they are operating like a 2 or 3% on the stable coins, and still were able to get like a lot of stable coins in there, when there was during the bull market, when everyone could, let's say, put the money and get the exposure. But there are some investors that diversified. Maybe this is not popular word in the crypto space, but people also diversify their portfolios, yeah, and got the exposure and are looking for some few X's, but also want to have some passive income or simply some savings and so on, so on. So yeah, and I guess that with the increased adoption, the ETF, what you guys were saying about, I hope that when the ETFs will be listed, and it will increase that will increase the knowledge about the crypto space, and increase the adoption and so on, and bring and more like a civilized, let's say, investors, and will start taking a part in the crypto space. But I need to also mention one thing. I think that it used to be a bit easy. Still, we are saying about some, complicated financial products, ETF and so on. But I still think that we need to, before we start running, we need to be sure that we know how to walk. And right now, even the on and off ramping, it's not so seamless. Yeah. And I think that recently it's even harder than it used to be. With all this, intermediaries when you want to on ramp and off ramp and the increased fees and so on. So it's discouraging. And and we are Bitcoin's like I don't know, like a 12 years ago, yes, a year old and so on. So we are over 10 years in the crypto space and still it's not seamless, even though that we can like use Apple Pay and so on, but the fees, intermediaries and so on, so on. So we can talk about, some complicated financial products in the crypto space, our yield farming strategies. But let's start with the first step. Let's make it easy everyone is waiting for the inflow of the, let's say, retail money from the investors that were not before in a crypto space. But let make it easier for them. Yeah. So that's
But this one's coming, Jacob. This one's coming. Like stablecoin regulation is one of the things that we're not going to wait like decades to see. We're going to see that very tangibly in the next year or two. And that's the one that I and you guys with USDC, they're doing everything they can to put themselves in pole position for that. So yeah, well, as long as we're dealing with stable coins, like all this on ramping, off ramping nonsense will be over and in a pretty easy way because we just won't need that.
I'm waiting
Hopefully
for the
not CBDCs.
I waiting for the one thing, CBDCs, because some people
Oh
are
man,
afraid.
hot take.
All right, another 2 hours. Let's go.
Well, for product, for my soil, for soil, for me and Mike, actually, we believe that it will increase the liquidity in the protocol. Simply, it will be a lot easier. It will increase the adoption and so on, so on. Yeah, as I said, we are boring regulated protocol, so
man.
we are waiting for it.
I mean, it makes sense. We're just talking about the devil here. Anyways, with that being said, I want to thank you guys again. This is an amazing discussion around regulations, around adoption, around traditional finance and the sector that we're seeing, especially with soil here in crypto. I do want to move things ahead. And before I do, Carmelo, you want to go ahead and plug us away? I think it's about that time.
Oh, is it time to say if you've been enjoying this content, like and subscribe and leave us some comments. Like I think Daniel, he was actually a guest last week. He just made a good point about algorithmic stable coins are banned in the UK. So that's interesting. But yeah, we any comments or questions, we always love taking questions from the audience. So feel free to leave comments, especially. We like those even more than likes. But yeah, subscribe. And also, fun time to mention that all the links to Soil and to Roderick's website and social handles and YouTube channels and all that fun stuff can be found below in the description. So definitely check these guys out because they're working on some seriously cool stuff. Yeah, that's my shill. Hope I did a good job.
No, great job. 2 thumbs up for that shill. So we're gonna go into there's been some pretty decent news around vulnerabilities in the crypto space in the last week, and we're diving back into a segment from last time. We're talking about in memoriam for Poloniex.
Is that how you say it?
Toddlers are stories.
Real bad laughing.
I love. Bad.
Woo! All right. So Poloniex was hacked. Over $100 million drained from a hot wallet. Carmelo, it looks like there's a lot happening on crypto Twitter, on a lot of other social media channels. What's your understanding of this? What's going on?
I mean, it's not just happening on crypto Twitter, it's happening in real life. Like $120 million was stolen. And I think they offered on Arkham which we covered also in one of these videos on iTest. They're offering a bounty. Their whole thing is bounties and incentivizing community to chase down hackers and gather information. So Arkham put up a pretty sizable reward bounty for anybody that has information that might lead to getting those funds back or bringing them to justice. But as of right now, I haven't heard of any leads on if they're able to get that money back. But I know a lot of people are laughing about it because Justin Sun is involved and he's not so popular. I mean, you either love him or you hate him. So there's a lot of people that are languishing or they're celebrating this. But I don't really. It's sad to see, but it just draws the attention that a lot of human error is behind a lot of these hacks. It's not necessarily the smart contracts or the tech. It's just companies not following processes or having the right security protocols in place. And it's 2023. You think we might have learned by now, but it's still happening.
Honestly, I can't believe that, we haven't seen a big hack like this in a little while. And you figured it was kind of like dead and gone. But yeah, like, you figure Poloniex is actually an exchange that's headquartered in the US. And so you figure there'd be some strong processes, there would be, you know, some regulations, some things that would have to dictate how they would operate internally, but supposedly not. I mean, just goes to show that these vulnerabilities can come from a technical side or a human side. And so strange, we're still seeing these big hacks, not even in today's world, from exchanges that are based out of these major countries that are extremely cautious to grant licenses to exchanges.
Even weirder how Peck Shield was the one to call attention to it in real time. Like, imagine finding out that your company is being destroyed from the inside out in real time. Just like they weren't even the ones to catch it first, which is kind of terrifying.
Yeah, it is very scary. I wonder how this could have been prevented with, maybe some standards, processes, or procedures. Sorry, guys, I'm an engineer by heart. I love, I love processes. Just gotta keep beating that horse. Anyways, yep. So in memoriam, obviously, that's a fun little segment of ours. Poloniex isn't dead. I think 120 million is just a fraction of their weekly volume. I hope they can recover those funds for the users' sake, because if there's anything this industry taught us historically, the users are the ones to suffer first, unfortunately. So best of luck, Justin Sun. We know you're doing very well at taking over the Turkish lira as Tron as the new currency in Turkey, but you're gonna have to turn your attention back to this one. And then, let's go into the last one. We've got our very last segment. Again, I want to thank everybody for joining. We're going to wrap this up with a really quick circle back and see what each of us are bullish on this week in crypto. Mike, I'm going to give you the floor first. What are you bullish on this week? Company, protocol, token, anything?
Of course, I'm bullish on the soil token, mate.
No.
What can I say? What can I say? And my CEO on my left hand, right hand. I'm bullish only on soil. And seriously, I think that the financial market is quite struggling. I think the high interest rates and the crypto is a child of low interest rates. And I think I'm not bullish at all. Jacob is completely opposite. Sorry, guys, but I think that the worst, that the new cycle is not beginning. I think that we are in some kind of middle end of the cycle, and the beta stocks are skyrocketing. And unfortunately, I am in the difficult, dif- in the space where the difficulties are upon us. And
I
yeah,
agree.
so I think we can be bullish on cash. I think we can be bullish
Oh
on
man.
uh, commodities, and I think the financial market is in not quite good shape.
Oh man, doom and gloom. But you know what? Bullish on soil. So thank you for that, Mike. All right, Rodrigo, tell us what your genius mind is thinking, man.
Man, I don't have things to be bullish on week by week. I'm still in my cave. I'm not ready to come out. But when we're talking about bigger trends, I think the dark horse is going to be stable coins. I'm massively bullish on stable coin use and adoption. But I mean it's not exactly something you can bet on as a token investment. But I think it's
Correct.
underappreciated how big a role they're going to play. But, yeah, so let's go with that, and the rest is just waiting for the ETF magic to kick in and see if that, restores restores funding for blockchain activity and for boring blockchain projects. Yes, we wanna see more of them. Thank
It's a
you.
good podcast name, Boring Blockchain.
Yeah, I mean it's not a bad name actually.
And,
Jacob,
you know,
give us your insights.
we had a board ape, so and it was so small. So why not? You never know what will be the next password. Actually, no. Week by week, it's difficult. And to be honest, when I was uh, into the crypto a lot, so it took me like a lot of time to analyze the tokenomics and so on, so on. And then when I started building with the mic and my partner building on my own project, I figured it out how it worked from the behind. What how we talked with the different protocols, and I had like a lot of meetings during the conferences, and I find out how the market actually worked. Not the market, but the participants of the markets. So I said, okay, I need to focus on my own project, because you can. It's Yeah, so that's what you can do. So I really believe in the technology. I really believe in right now we are prototyping with the integrating with the gaming blockchain, and I really do believe in how the blockchain auto improve not only the financial market but the how it will reshape the gaming industry. And I'm, let's say, bullish on gaming projects, and got some exposure on it. Uh, but it mainly because I had a chance to talk with the teams. I guess that's what I recommend. It's not easy for the investor, but that's what I recommend. If you really want to invest in some project, try to find projects and talk with the team, because you can really that's the best test. You can create like the best white paper, light paper. You get the best advisors, KOS, whatever. But a lot of projects are, press on some conferences and so on. Try to reach out to the team, verify it, try to talk with them on the Telegram and so on. Join AMAs. That's the way how you can validate the process. Actually, that's why we are today with you, and that's because that's our strategy, simply to be 100% transparent.
I
Of
love
you
it.
want to ask what we are doing, I want to reach out and tell you, okay, if you got a question, I can explain it. And that's what I'm doing. So actually, it's I really believe in the technology. I really believe in it. But unfortunately, you need to be patient. And I don't think the bull market already started or the same. I don't know if there is a saying that the history do not repeat, but somehow rhymes. So for sure, there will be some opportunities in the next months, future, but you need to do your job, do your homework. Uh, Maybe some people think that there's an easy money and easy solution, but it's not. No, it's life is difficult by the helmets.
I love that. Words of wisdom, man. I think
Yes.
you know what? We gotta make a new rule. Founders can't be bullish on their own companies for this segment. I was hoping for somebody to say Pepe or something. All right, Carmelo, let's wrap it up real quick. What are you bullish on?
I'm bullish on the first person to tokenize Bitcoin ETFs.
Oh my goodness. As you're
No,
never
no,
talking about crypto inception.
yes.
So
No, I'm really,
yeah.
I think I'm really bullish on decentralized storage. So Arweave, is really cool, and it goes back to boring blockchain because we're boring people. So there's nothing less sexy than storage, but there's nothing less or more necessary. So I think these sort of protocols, they don't attract speculation as much as these hyped Telegram bots and AI stuff. So people are going to kind of forget about it, and then it's just going to get adopted by real companies. And before anybody realizes it, it's going to take off, and they're going to see, why didn't we see this coming? And it's because you weren't looking in the right place. You were looking at frog coins and cat coins, and you were looking at generational wealth, but you didn't find it.
Yeah.
So yeah, I'm bullish on that.
All right. I think that's a great choice. I think personally, I'm bullish on my own Solana bags, which is why I gaslighted you into creating the Inverse Sasha index, which it worked perfectly.
We'll see
More,
next
more
week. We'll see
seriously,
who's right.
we'll see what happens. More importantly, I think I'm bullish on Immutable. I'm bullish on Arbitrum. I'm bullish on this news around Ubisoft specifically because it is a massive step for a major publicly traded corporation to walk into this arena that Rodrigo, you, myself, Mello, we've all been a part of in designing token economies for gaming and gaming companies, and seeing that we finally have validation. There's someone in the space that's going to take a product focused approach, a user experience focused approach first. And, this is the beginning of a big revolution. I think we're finally going to start to get some recognition for the hard work that we've been doing because there's more eyes turning to us. So that's why I'm bullish on those in particular.
You just shielded your own project too. You broke the rule you just made.
Hey man, I'm like third in line and doing that today. So today's the exception, and then next week we start the new rule.
But maybe,
Anyways,
maybe next time I can shield your project and you can shield mine. That's how you. Oh,
good idea.
The rules.
All right.
Backroom deals.
thank you guys for having us today. That was a
Yeah,
pleasure.
thank you for joining. And
Thanks so
everybody,
much.
again, check out those links in the description. And thank you for joining us. We're so happy to speak with all of you. Great episode.
Guys, take care.
Jacob, Mike, take care, brothers. Thanks for coming on talking about soil. I wish you guys the best of luck in your startup journey. I wish you guys all the success. And I think Mello, myself, and Rodrigo may be watching and seeing how things are going. Make sure you reach out if there's anything you need. Again, everyone, thanks for watching. Rodrigo, thank you very much for joining. Your expertise is always welcome. We love speaking with you, and I think we've had more interesting discussions, I think, between three of us than we can say with anyone else in this industry. So thank you always
Wait,
for
I have one
sharing your
last point.
knowledge, your experience.
I have one
Bye-bye.
last point that
Pleasure.
I was so excited to say we're not affiliated at all because we want to be transparent.
Yeah,
So we're not affiliated at all, unfortunately, because it sounds super cool, but we're transparent here. So yeah, we're not affiliated. We're not
Unless
shilling. We're not doing any of that stuff. But we're happy to
unless
see
Mike
you guys
wants
doing
to
well.
give us tokens right now. I'm totally down for some tokens, Mike.
Oh
We'll just
man,
put 'em on the spot.
our tokens are priceless.
Oh man, I like that. Yeah, that's the buyback mentality. I'm gonna reinvest in myself.
Great guys. Thank you very much for your time and for spending in very, very, very good efficient way. Bye.
It was great speaking
Mike.
with you. Take care, brother. Thanks everyone for
Ciao,
watching.
everybody.
Ciao. Take care, y'all. Another boom room in the books. All right, man. I guess that's it.
See you, everybody. Watch the episode
Ciao.
if you didn't catch it live. Bye.
Where we talk about all things boom from separate rooms. Until next week. Bye.